Hello everybody, welcome back to my channel, Trading Secrets. This channel is for entertainment purposes only. For those of you who do not know, my name is Ali. I have over 20 years experience teaching accounting, economics, business and law. And through this channel, I'll be providing some stock analysis and also an update on our $1 Million Challenge, so please stay tuned. Before we start today's special edition video, a quick recap of the previous video. We looked at 4 stocks to add for your watch list, so please refer back to the previous video for 4 stocks for your watch list from Monday. So before we start the video, quick recap of the $1 Million Challenge. So anybody does not know, this is a journey of an investment of $1,000 to $1 million over a period of 3 years, using compound return investing and looking to achieve 201 trades with an average return of 3.5%. We do take into account losses, and it's not 201 consecutive trades. So we have a special spreadsheet with the chosen stocks for the challenge. And the Discord community is now well in excess of 300, where people will help each other and support each other in terms of research, technical analysis, sharing of information, entry prices, chart analysis, etc. The Discord dedicated area has sections in there which include agreement, FAQs, an opportunity to ask questions and chat. The stock spreadsheet is also available in there. You can also share your buys. We have a King and Queen alert section. And there's also a leaderboard in there in terms of updates. So if anybody's interested, details are in the description below. Join us on our journey from $1,000 to $1 million. This is a special edition video looking at a new calculation for the special dividend. In one of my previous videos, I did carry out a calculation for the special dividend based on sale of assets. And there has been some developments, there have been some changes, and there has been a sale in the same area that we're going to look at. That is similar to the assets held by the previous TRCH. So let's have a look at the factors that have affected this new calculation. We're going to start with a news article here from the Texas Standard. Okay, so if we see this article on the screen here, we can see that Shell has sold all of its Permian Basin assets. So we can see here the amount of land was 225,000 acres. The payment received was approximately $9.5 billion. So we're going to look at a comparison of these figures with the figures with regarding to our potential special dividend. In my previous video at time of editing, when I did the first calculation of the dividend, the price of oil was around about $70 a barrel. What I'd now like to share with you on the screen from Bloomberg here is the latest prices for oil and gas. We're going to focus first on the price of oil. So if we have a look at the screen here, we can see the price of oil now is very, very close to $80 a barrel. So significant increase in the price of oil now. So we're close to $80. Previously, at time of editing, when I calculated the first special dividend figure, it was $70. So this is an important update that we need to take into account. What I would now like to do is have a look at the chart for the previous 3 months, looking at the price of a barrel of oil. So on this chart, we can see around about August the 23rd, price of a barrel of oil was close to $60. And since then, we can see the general trend is upwards, currently just below $80. But if this trend continues, we can certainly see oil hitting $100 very, very soon. Let's now have a look at a recent news article dated Friday the 8th of October. And this is looking at the price of natural gas. And we can see here the headline is, natural gas prices are skyrocketing around the world. Here's why the US may not suffer as much. So what I'd now like to have a look at is the chart. So again, this is a chart going back to February 2021 for natural gas prices. So we can see here the price again is significantly higher, and the trend is upward. So this will also increase the value of assets with regards to any potential sale. Before we look at the new calculation, I'd like to now share with you my old calculation for the special dividend. So this was based on 134,000 net acres. Working interest was 0.665. We're looking at a calculation per acre on average around about $25,000 per acre. So that was a fairly conservative value there. We could have gone higher, possibly $40,000 per acre. We could have also gone lower, maybe $5,000 per acre. So that was the figure that was used based on a previous calculation. The TRCH Rio Grande sales based on this calculation was just to be in excess of $2.2 billion, 10% legal and admin fees, and then that will give us a valuation in terms of special dividend based on 175 million shares of $11.45. And then we have the additional Permian Basin sale. We're looking at a $1 figure for that. Again, fairly conservative, giving us total net figure for the special dividend of $12.45 per share. What I'd now like to add in is a comparison with what happened with Shell. So we saw in the previous news article they did sell their land for approximately $9.5 billion. So I'm going to do a quick comparison here on the screen of the Shell sale of assets versus the TRCH potential sale of assets. So on the left hand side, I've added in terms of Shell, they had approximately 225,000 acres. Torchlight Energy, oil and gas rich land, which we know is confirmed. Please refer back to previous video for that. In terms of confirmation of the oil and the gas on this land. But this is a smaller area compared to the Shell sale, and this is 134,000 acres approximately. So the sale of Shell was approximately $9.5 billion. Now that is more than 400% higher per acre than our estimate. So that basically, what that indicates to me is the estimate that I used in my first calculation was around about $2.2 billion for the land. Shell sold theirs for $9.5 billion. So it's a higher premium of more than 400%. So we are being a little bit conservative. There is a reason for that, and we're going to look at that in the final row at the bottom. The left-hand side, we can see the land is more developed than ours. So obviously that's attracted a higher value. And the new estimated sale price is now going to be based on higher value of land. So the land is certainly, we can see as a guide in terms of certainly the land is not to be sold cheap. But we're still going to be remaining conservative. So my first calculation was based on a sale value of 2.2 billion. However, because the Shell land was more developed and had more value, I'm going to increase this valuation to approximately now $2.45 billion. So not a huge increase, but a significant increase. And the reason why I'm not having a huge increase is I want to be fairly conservative. I want to give the managers who are in charge of selling this an opportunity to get the best possible price. And we're also looking at not overvaluation, not about an overvaluation of the land. In other words, we're not asking for like prices in terms of the Shell, because that is 400% higher per acre. So we are going lower. Let's see where that takes us. So on the screen now, you'll be able to see my new calculation. So this is now based on a new projected dividend calculation, and this is based on higher prices for oil, higher prices for gas, and higher prices for the land. And these are based on, to some extent, the value of the Shell sale that just happened recently, and also take into account premium prices for oil and gas. So what has changed here in terms of the calculation is the average acre per sale. I'm now going to be using a figure of 27,500. So we're going a little bit higher here. Working interest is going to remain the same. So that's just going to generate us a higher figure now of just in excess of $2.4 billion for the sale. There will be approximately 10% administration and legal fees, approximately $245 million there. And if we take into account 175 million qualifying shares, so that is extremely high, but that's what we're going to go for. If the shares are less than 175 million qualifying for the dividend, so let's bear this in mind, we're going for the maximum figure that we are aware of, and details were explained in the previous video of how we got this 175 million. So please refer back to the previous video of how we got the 175 million, but we're going to continue with the same figure. And if we use that value of shares, then that's going to give us a dividend value there of $12.60. Now we need to add on the Permian Basin sale, so I'm not going to change that. I could possibly change it to $1.10 and add on a 10% premium, but again, the objective here is to remain as conservative as possible and not put our expectations too much up. But what we do want as investors into the previous torch is a fair value, so that's why I'm using this. So the fair value that I see is $12.60 plus the $1, giving us a new special dividend per share of $13.60. And finally, what I'd now like to do is finish off by having a look at all the external factors and the other variables that could affect us receiving this $13.60. So one of the reasons why many people invested in the previous ticker symbol TRCH was in order to receive this fair value dividend based on the valuable assets, based on the potential price of oil and gas. So that's what I think we should be expecting to receive as a minimum, because the calculation is based on conservative estimates and conservative valuations. However, the other external factor going around right now is the new ticker symbol MMTLP. So please refer back to the previous video looking at all questions regarding that ticker symbol. So that's been identified on the OTC Pink market as a preferred share for Meta. People also had preferred shares in their accounts prior to this, so that's one of the factors that is causing confusion. Another external factor, whether or not we may get this dividend or we may not get this dividend, is the new company that has been created called Oilco. So please refer back to my previous video looking at the potential impact of that. So that's another external factor regarding whether or not we get this. So there could be something announced with regard to that if there is no sale taking place. So again, that's information that has not been publicly shared yet. It's all speculation. So we're still expecting some information from George. And finally, I'd like to reiterate a message for George and reiterate a message for Meta Materials, the company, is please communicate with the shareholders, please communicate with the investors. All we ask is communication to say we cannot comment. That's the bare minimum that we need, and there's no legal reason why you cannot say we can't comment. That's all we need. To just a response is better than no response. So people may be losing money, people may be losing the special dividends due to maybe selling this ticker symbol MMTLP. So it could be a legal technicality where they do not receive their special dividends. In a previous video I said that this should not happen. That's not a statement to say it will not happen, so there is a difference. When I say this should not happen, that's an opinion. I believe everybody who invested in the previous qualifying dates for TRCH should get the dividends. That's an opinion. The facts are it is possible they may lose them, but that should not happen. Finally, I think everybody will be glad once this dividend situation is over and closed, so the speculation is over. So fingers crossed we all get news fairly soon, hopefully this week. Thank you very much for watching. Please stay tuned.